Hello and welcome. You're watching Market Fatafat with me, Ankita Saxena, and with me as always is Snehi Shah. And this is the show where we take you through all the stocks that are in focus today, either on the back of news flow or on the back of technical charts. But first up, we always take stock of how the markets are shaping up. So let's check how the market is really panning out. Well, it's the fifth straight day of decline on the Nifty. In fact, we didn't even manage to hold on to the psychological levels of 24,000, and we did see the India VIX also shot up by almost 4% today.
Absolutely not looking good at all for our markets, because remember at around 11 we had that Nifty that had actually tilted into the green above the 23,900 mark. Things were looking optimistic for us, but ever since then once again it's been sideways for the market. Nifty right now 300 points off the highest point of the trading day, 200 points lower on the spot basis, 0.8% cut coming in. Let's pull up a Nifty Bank, because Nifty Bank is also doing very poorly in trade right now, roughly 400 points off the day's highest point, and 0.7% cut coming in on Nifty Bank as well. Sensex following suit as well, not doing pretty well in today's trading session. Let's also take a look at what the broader markets are up to, because no show of support coming in from that front as well. You have the mid cap and the small cap index that are trading away. Mid cap, however, is the one that is actually getting beaten down in today's trading session. It's at a 1 month low also coming in for the mid cap index. Small cap also has rather paired losses, because almost a 1% cut coming in on the small cap index as well. Taking stock of what the sectors are up to, no sector in the green right now. Everything is trading in the red. Nifty IT biggest loser, 2.5% intraday cut coming in, followed by realty, PSU banks, auto, media, Nifty Bank, FMCG, energy, pharma, metal in your pecking order. Metal is the index that is losing the least, but nonetheless in the red right now. In fact, rather flat is where the metal index is, but doesn't seem like we're going to see any recovery going ahead, because India VIX had spiked up once again, roughly 4.5%, has simmered down right now to 1% uptick coming on India VIX as well, below the 15 levels for now. But let's see what the market does in the last 2 hours of trade and also heading into next week. But looking rather bleak right now, Ankita.
Absolutely looking rather bleak on a Friday, but let's get Aamar Singh, who's a Senior Vice President Research from Angel One, on the technicals, and from our research team. We're joined now by Jinay. Hi, good afternoon to the both of you. Thank you so much for joining us. So let's get started with all the stocks that are in focus today. Well, Bharti Airtel is a name that's in focus today, and it is, in fact, the stock is in focus on the back of the prepaying of the 3,626 crores of debt to clear all the liabilities for the spectrum acquired in 2016, and the company has prepaid a total of 28,320 crore rupees of the spectrum liabilities in this calendar year. With this, Airtel has now prepaid all its spectrum dues that had the interest cost higher than 8.65%. Also, another piece of news is that Bharti Airtel has entered into a partnership with Z5, India's leading OTT platform, to offer exciting digital content to its Wi-Fi customers. Now, all customers on plans starting from 699 rupees or higher will have Z5 included as a part of the Airtel Wi-Fi plan at no additional cost. And on the back of these two news flows, Bharti Airtel is in focus today, but it has given up all those morning gains, mirroring the market. It is trading with cuts of 0.6% right now.
Okay, Bharti Airtel, very positive news flow, but nonetheless the stock is still under pressure, giving into the market pressure overall. But you've picked out Aamar, you picked out KC International, you picked out New India Assurance on the charts for us. Sorry, a little bit of a glitch. Tell us what the charts are looking like when it comes to New India Assurance, because last 1 month, a very healthy uptick coming in, more than 20-25% on the charts itself. But last 6 months, however, the stock has been consolidating. So recovery has been seen, but it's been very recent. So tell us what's the news flow going ahead.
Yeah, I would say that there are definitely some news with regard to the insurance players, and what we've seen in the New India Assurance is that you rightly said that the stock has corrected. It witnessed a correction of almost more than 40% from its recent highs of 300 plus, and then correcting all the way towards 160. From there, it has bounced back, and this month itself, the stock is up by almost 12%. But if you look at it from a quarter perspective, the current quarter, it's still down by 5.5%. So what we've seen in the stock over the last few trading sessions is that it is attempting to breach above the 200-210 mark. So I think that something has happened, and the stock is currently trading around 217. So the immediate zone of resistance for the stock is somewhere around 220 or so. Sustaining above 220 is very important. If the stock is able to sustain above 220, then the stock could witness a rally towards the 240, 245 levels. And what has happened is that the stock has now got strong support coming around the 200, 205 zone. And the best part is that we've seen some significant volume increase also the last few trading sessions, and today has been exceptional in terms of volumes. So the important level to watch out is 220, 222 on the upside. Sustaining above that, then when one can witness a very sharp rally in the stock towards 240, 45 levels.
Okay, so those are the levels Aamar is spotting on New India Assurance. Let's shift focus, talk about a stock that's been in focus and has been a very high flyer despite what the market is doing, and that's MCH Tech. Now this stock is in focus because the company has announced that it has received 226 crore rupees worth of orders in clean energy and aerospace segments. This includes 191 crore rupees for orders for various products from Bloom Energy in clean energy sector, and the other 35 crores of orders from reputed customers in the aerospace field, including Rafael, IMI Systems, and the IAI. The order value reflects the company's increasing market share in clean energy and aerospace sector, MCH Tech said in a statement. Furthermore, the company expects the orders worth 225 crores more would be executed within 1 year, and balance orders shall be executed by April of 2026. So, order pipeline looking strong and healthy. This commentary is also being liked by the street right now. Other than this, big order win coming in for MCH Tech worth 226 crore rupees. The stock is up 7% in today's trade.
Alright, that's MCH Tech soaring away in an otherwise somber market. But coming to you, Jinay, SRF is the name that you picked out for us. Nuvama, let's come out with a brokerage note on it. Tell us, what does the note say?
Well, definitely SRF is in focus. Nuvama has come up with the note and they have maintained buy rating, and they've hiked the target price to rupees 2672. Now what they say is the specialty chemicals that will go through challenges in Q3 FY25, but it may be still challenging. But if we talk about Q4 FY25, that is something they continue to look promising for that. Also the theme of China plus one, now that has structurally shift and have a merit despite weak episodes of weakness for the company. Now they're expecting SRF specialty chemicals to expand at a 20-25% CAGR over the next 5 years. Also the active ingredient that is likely to contribute in FY26, adding to additional revenue for the company, and that is why SRF is in focus, currently trading up about 2%.
Okay, so that's the reason why SRF is in focus. Brokerage note, bullish call coming in. The stock is doing well. Moving on, Aamar, you've picked out GIC for us, General Insurance Corporation. Very healthy moves coming in over the last 3 months, 6 months, even this last year gone by. Stock is up roughly 60%. Do you believe that these levels could sustain on the charts heading into next year as well? What's the outlook when it comes to the levels that you're spotting?
I would say that if you look at GIC, what we've seen is that the stock has been trading, I would say, positive, and then it was somewhere or the other finding some resistance around the 440, 450 zone. And it was unable to breach that level, and recently the last couple of weeks that level has been taken out. Secondly, if you look at the structure of the stock from a long-term perspective, from an intermediate-term perspective, the structure is very strong and the momentum has been building consistently. So that's one. And secondly, what we are seeing is that the volumes have increased significantly over the past few trading sessions, today also being an exception in terms of volume. So now what happens is that 440 and 450, that becomes as a very strong support zone for the stock. And the stock, if you look at it, this month itself is up by almost 22%. And there can be more upside to the stock once it sustains above the 460, 470 zone. Currently it's around the almost 490 level. So I wouldn't recommend entry at the fresh level, but any pullback in this stock is definitely a buying opportunity because the overall trend and structure for the stock remains very strong and positive.
All right, with that, it's time for a quick breather. You don't go anywhere after the break. We'll get you some more stocks that are in focus today. Stay tuned.